Welcome to the Dealmaking with Laura DiFrancesco podcast. I'm Laura DiFrancesco, your host. We're talking all about mergers and acquisitions, buying and selling small businesses, as well as corporate law. We are taking our experience closing over $10 billion of transactions since founding Dean Street Law 5 years ago, and my experience being an M&A and corporate attorney for over a decade and making it accessible to you as an entrepreneur. I hope that this helps you in navigating the complex world of mergers and acquisitions. And also, we're always happy to be a resource for you here at Dean Street Law. You can always apply to work with us through our complimentary consultations linked in our show notes. And a huge shout out and thank you to everyone who's subscribed and left us a 5-star review. If you haven't yet, be sure to subscribe and also leave us a 5-star review. It's one of the best ways to support us as a small business. And also be sure to share with your friends and colleagues on social media, through text, email, or however is easiest. It means the world to us that you're supporting our content and helps us make more to support you in your journey. Welcome to the latest episode of the Dealmaking with Laura DiFrancesco podcast. I'm your host, Laura DiFrancesco, founder of Dean Street Law, Ethereal Farms, Flourish Co-working and Event Space, LD Brand, and a couple other companies. So I'm a multi-time founder and actually Villanova's Law School's Entrepreneur in Residence for spring 2026, which I am so excited about. I actually have that first Entrepreneur in Residence session where I'll be mentoring aspiring entrepreneurs at Villanova this coming week. So I'm really excited about that. And then in addition to that, I am an M&A law firm. I'm an M&A attorney specializing in entrepreneurship through acquisition. Today, we're going to be talking about a specific subset of entrepreneurship through acquisition, which is a search fund. I cover this in detail in my upcoming book, Entrepreneurship Through Acquisition, A Legal Guide to Buying a Small Business. So if you haven't checked it out yet, please check it out. You can download the first chapter, pre-order it, leave us a review for it, and your support means the world to us. So we're going to be talking about the basics of a search fund, how does it work, the different phases, advantages and challenges. This is going to be one in our series of understanding the different strategies for completing an entrepreneurship through acquisition search. So we're going to be talking through the nuances of a search fund specifically. What is it? A search fund is where you raise capital from investors, and that may be yourself as an individual searcher, or if you decide to partner with a partner. Typically, it's just 2 searchers in a partnership, but sometimes I have heard of 3 where they start a search fund group with 3 people. It's a lot less common. Partnerships in themselves are less common, but people find their pros and cons. And if that works for you, amazing. And then other folks go it alone. And so what the search fund does is it raises capital to fund a full-time search, and that initially is going to provide living expenses as well as your search costs, because there are costs to performing a search, including traveling to go see sellers, going to conferences, meeting people, raising more capital for the acquisition itself, as well as your legal costs, quality of earnings expenses, and other advisors that you may have within the ETA space. So it's going to be where you fundraise initially. So you create a fund, your search fund, you're creating a fund to complete your search. And then that will enable you to go on to acquire a business. Now, it is expected, of course, when you build a relationship with an investor, that is them putting their money behind you. And so it's taking that on with a lot of responsibility, both from an ethics standpoint as well as from a legal standpoint of delivering on your promise. That does not necessarily mean that you are positively going to close and buy a business. There is a certain amount of risk that investors take that during the search fund time period, that may be a year or 2 years or more, that the idea is that during that time, an acquisition is completed, and your obligation legally and ethically is to use good faith efforts to put your full time and attention and resources into searching for a business and completing that search. But there are situations, a small percentage of them, when a search and acquisition isn't ultimately completed. And then that's going to be dependent on your relationship with your investors. But most of the time, there isn't any monetary penalization as to not completing an acquisition. As an investor, what their benefit is to backing you so early on, even though the risk is higher, is that they get preferential terms going into the acquisition. They get the right to make an investment in your acquisition at better terms than an investor who's coming on after the acquisition has already been lined up. It's under LOI. So because investors are taking on more risk, they're going to get a higher reward in the search fund economics and in the overall investment terms. And so the benefit to the searcher is that they get access to capital early and they start building their pipeline for investors early. You can still complete the search self-funded. That's called a self-funded search. There's also self-funded search and acquisition, where the searcher themselves fund the search component as well as the acquisition. But know that in every situation, the earlier on that you're bringing on investors, the smaller your piece of the pie will be. So if you're bringing on investors in a traditional search fund, before your search is completed, then you're going to have the least amount of equity in the business, the least amount of upside for yourself, compared to if you were to bring in investors just for the acquisition, compared to if you were to self-fund the search and acquisition yourself, then obviously you get 100% of the upside and full control over the search parameters. When you bring on investors early on, they're not only going to have a higher reward for their investment early on when the risk is higher, but they're also going to have influence on your search terms and what you're looking for specifically. So you want to make sure that there's really good alignment around what you're looking for as an individual and what your buy box is from a lifestyle perspective, to where you're living, to which types of company you're willing to acquire. Because remember, as the entrepreneur, at some point it is likely that you will do every job in the business, because ultimately when your money's on the line and when it's your career and aspirations, if something falls through, you're the person that becomes the problem solver. And it may even mean rolling up your sleeves and digging in yourself. In addition to getting capital, you also receive the benefit of experience. So you want to make sure that you're aligned fully on your buy box, their buy box. You're not, if they're looking for you to buy a business anywhere in the US, that means that you should be ready to move to the least desirable place in the US, and that you would be okay with that. Your family would be okay with that, and that would work out. But in addition to that buy box, you also have to think of who are you working with as an investor, and how can that actually support you? How can their experience support you too? And what level of support do they plan to give you? There are certain search fund investors that are very hands-off. They're just going to say, here's the funds, go search, do your process, and let us know when you're ready for us to make the next investment. And then there's other investors that want to be very involved in your search. They want to be someone that you're talking to with the different opportunities, and they're coaching you through challenges. I will say all investors want to hear if something goes wrong, but then in between that continuum is a varying level of involvement that different investors want to have based on their model of success. So you want to be asking, what are you expecting, what they're expecting, and make sure there's full alignment on that, because not only is there an ethical responsibility when accepting capital and a fiduciary responsibility, a legal responsibility when accepting capital. There's also regulatory responsibilities, such as filings, depending on how much capital you're receiving, who you're receiving it from. There's a lot of nuances in that, but expect to be required to complete Form D and Blue Sky Law filings unless you're notified otherwise by counsel. Whenever you're fundraising, you are getting into a whole nother pot of regulatory compliance requirements. When it comes to navigating corporate law, entrepreneurship, and managing small businesses, experience matters. Dean Street Law is a boutique corporate firm specializing in mergers and acquisitions and additional focus in real estate, commercial transactions, finance, and corporate governance. With over $10 billion in deals closed, Dean Street Law has extensive experience representing hundreds of clients in thousands of transactions, from small businesses to Fortune 500 companies. Whether you need startup guidance or advice on closing multi-million or multi-billion-dollar deals, we're your trusted partner every step of the way. Visit deanstreetlaw.com in the show notes to schedule a complimentary consultation. The next element we're going to be talking about, how does it work? So there's two phases within a search fund. There's going to be the search phase and then the acquisition phase. In the search phase, not only are you building relationships with your potential investors to raise your search fund, and you're not going to accept funds until you've met that threshold of being able to raise capital. And sometimes that's a little bit of a chicken and the egg situation, because sometimes you're raising capital and a lot of people, investors might say, well, I will invest if you raise up to this amount, right? And so they're looking to see the proof of concept from others as well, that you're worth investing in. But ultimately, what are they investing in? They're investing in you. So being someone who shows up and is doing their work, showing up prepared, understanding investors. If there's publicly available information on what their investment box is, that you understand that and you're approaching their time and consideration with care and not just reaching out to every investor you ever hear of. So it's on you to be showing up and impressing them. And that includes learning, right? Like spending time learning through podcasts, through Acquisition Insights, our course on buying a small business, that you're taking your role seriously. That's going to be something that impresses them, because ultimately a search fund, they don't have anything to invest in but your promise to work hard and your likelihood of success in working hard in finding a business to acquire. And then once they have a business to acquire, then becomes the real upside potential for them. So the search phase is where you're building relationships with investors. You're proving yourself. You're establishing those connections, finding similarities and where there's parallels of your buy box and their investment box. And then you're also going to be building relationships with advisors and potential sellers. So you want to have a really clear strategy on how you're going to find a business and what type of business you're going to look for. Now, when you're working with investors, you might have a couple theses that you're working with, and you might say, well, this is my thesis here, and I believe that this is a good business to buy, and this is a good area to buy in. And you might have this thesis, but you might have to be more flexible than one or two theses, because ultimately the goal is for you to acquire a business. And sometimes you might find that it's harder to acquire a business in this particular industry than you thought. And in terms of amount of funds raised, most of the time you're going to see between $200,000 to $500,000 in capital raised. It all depends on, is it an individual search fund? Is it a partnered search fund? What's the timeline of that search fund? And what are the expected costs based on the type of business that the searcher and the investor are targeting? When you're looking at a $20 million deal, it's going to have higher pre-closing costs for your search than you would expect to have for a $1 million deal. In addition, just so you know, when you're looking to involve search funds and when you're looking to bring on investors, you're generally going to be looking a little bit more upstream, which does prompt competition with private equity and strategic acquirers. That is because in order for there to be enough returns for your investor and yourself, you're generally going to be moving upstream a little bit in value. You're going to be working through the due diligence to find that business that has sufficient revenue streams to service debt, to be able to provide a return on investment for investors and ultimately for you as well. So you're going to need to become familiar with financial analysis and either work with a professional or become familiar yourself with financial analysis to be able to work up what the different scenarios are going to be, your cap table, pros and cons of different investment terms. And then you're going to be also responsible for negotiating the acquisition. Now, your investors are going to require a number of things from an underwriting perspective, just as if they are a lender. And sometimes they may also be your lender. You may have an investor that provides debt and equity. That's possible. And then you'll move into your acquisition phase. The acquisition phase is when you're under LOI, when you're completing due diligence, negotiating transaction documents, closing, preparing for closing, and preparing for your post-closing strategy and integration if necessary, as well as your exit strategy. All of those need to be aligned, because when you're fundraising, you have to make sure not only is your acquisition strategy aligned with your investor, but is your exit strategy aligned with your investor? Because a lot of these search funds, they may be a fund themselves, and then the fund themselves have different requirements for their investors. And so if they are required to exit an acquisition or an opportunity in 5 years, you need to know that too and feel that you're aligned on that. And there are few but more growing evergreen funds as well, where the goal is not to exit, but the goal instead is to grow and keep and continue to profit from a business. So those are a couple things to consider. Now let's talk about the advantages and disadvantages, the challenges. We've talked about this in a couple different ways throughout so far. But the number one, I would say, advantage of search funds is that it is proven that it provides a significant opportunity for success, especially access to capital. This isn't always possible. If you want to be a searcher, if you want to be an entrepreneur through acquisition and you don't have the capital to buy a business yourself, search fund is a good way to start getting there. Other ways, though, are having creative conversations with a seller that you've given more opportunity to get to know you, you've built more rapport and trust with, and increasing the amount of the seller note sufficient to count as capital, or keeping the seller on as a part owner. There's a lot of different creative ways to access capital, but I will say a search fund, that's one of the primary benefits, is access to capital and proven business model. Search fund that are targeting businesses that already exist. This is proven to be profitable in a number of different ways for both the investor and the searcher. So that's why a proven methodology is something that will be continued to be grown and nurtured within the economic environment that we have. In addition, there is increased attraction to investors when there is a search fund, that they are going to be able to have a bigger return on their investment because they've invested earlier. And it also helps you give more comfort around, if you know that you need access to capital to close, but maybe not to search, making that something gated to build those relationships can also help. I will say a lot of search funds are targeting MBAs, MBA grads at specific schools. So there is a lot of competition in terms of search funds. That's not to dissuade you in any way. And there are more popular methods now where search funds are supporting more experienced individuals later on in their career rather than just recent MBA grads, but it's something to note. In addition, the challenges of it is that it may have a longer time frame, because not only are you looking for a business that suits your preferences, but you also have to find a business that's aligned with their preferences as well. In addition, they have increased control and less autonomy for entrepreneurs, and the specifics around the alignment of not only acquisition, but the exit can be challenging to line up as well. But those are all conversations you want to have before you raise a single dollar. Of course, the challenge is as well with regulatory requirements in terms of compliance for fundraising, as well as fiduciary responsibilities, making sure you're making the proper disclosures, and that when you take someone's funds, you then have a fiduciary duty, an obligation to them legally to take care in various aspects. There's different types of fiduciary duties, the duty of loyalty, the duty of care, and a number of others. And you'll always want to be working with an attorney. If you are raising a search fund, it's non-negotiable. You'll need to be working with an attorney, because not only are there the legal aspects of this and advising you on making sure that you're making the proper disclosures and proper filing requirements, but then also that you understand what those fiduciary requirements are and what you're legally obligated to do when you fundraise. So those are just a couple aspects of a search fund. I hope this has been helpful. It's certainly a great tool if you're looking to raise capital for your acquisition and your search as well. You want to go into it full time and you're willing to be reporting to others for the financial success of this search. I know for me personally, fundraising is something that I have a lot of trepidation with and approach with caution, and I recommend that my clients do as well. It's a significant commitment to make and a responsibility to take on. But with that said, I know that you can be successful in it, and we are happy to help you do so. We work with searchers creating search funds and work through different creative ways to also raise capital. If you would like to do it more creatively than just the traditional search fund, there's a lot of options for that. Be sure to schedule a consultation call through the link in our bio and in our show notes. And I'd love to hear what else would you like to hear on the podcast. If you'd like to learn more about search funds and other types of entrepreneurship through acquisition, be sure to check out my book, Entrepreneurship Through Acquisition, A Legal Guide to Buying a Small Business. And if you have a moment, share with a friend, leave us a 5-star review. That is a wonderful way to support the podcast. Thank you, everyone, and I will see you in the next episode. Cheers and happy deal making. Thank you so much for joining us on this episode of the Dealmaking with Laura DiFrancesco podcast. I hope you found today's discussion insightful and that it brought you one step closer to mastering the art of mergers and acquisitions. If you enjoyed this episode, please be sure to follow and subscribe to Dealmaking with Laura DiFrancesco on your favorite podcast platform so you never miss an episode. And if you found value in our discussion, please leave a 5-star review. It would mean the world to us, and share this podcast with your network, friends, and colleagues. For more in-depth resources, be sure to visit our website, deanstreetlaw.com, where you can find articles, guides, and more information on our services. Don't forget to follow us on social media for the latest episodes, updates, tips, and exclusive content. You can find us on LinkedIn, Search Funder, at LMDFrancesco on X, and at Dean Street Law on Instagram. Join us on our next episode where we'll explore more deal-making insights. Cheers and happy deal making.